Hey, what's up, everybody? All right, this is Chef again, and today we're going to look at this weekly watch list. We're going to look at the market breakdown, looking at a few things this week. And as you all well know, this market looks bearish as heck, right? I guess that's everybody's question, everybody's perspective. Everybody is so bearish right now. I'm doing this right now before market opens, just so we can get an idea of where the futures are going to open. But again, that's not going to determine where we open in general, only because anything can happen overnight, right? This thing can gap down and run back up. This thing can gap up and then drop back down. So whatever the case may be, something everything will determine basically at market open, which is tomorrow, Monday morning, right? So let's get into it, guys. All right. So what we have here is we're looking at /ES. We did just finish ER for all the FANGs, all financials. So those two sectors are basically done, and everything else is coming in between, right? The in between kind of really is not a big issue. The biggest sentiment that we were looking for was the FANG stocks, and which you all know that the FANG stocks were the ones that were holding the whole market throughout this whole pandemic, right? So everything through COVID, FANG stocks, tech in general, was holding up the market, and it gives so much strength, right? What's the next best thing that's going to happen? Because everything is basically looks like it's dropping because of earnings, because of inflation, because of interest rates, China lockdown, the war with Ukraine and Russia. I mean, there's just so much going on that is bringing back a lot of volatility, and the volatility is being created by all these catalysts, which is from the beginning of the year, we've kind of just been downtrending. So if you want to think about it, from the beginning of the year, we've dropped 800 points, okay? That's not a lot compared to the whole recovery from this huge drop. You're looking from 2170 all the way to that 4808. So you guys do the math, right? It's not even a fraction. But either way, we are still looking at a negative impact because of the earning results. Okay, so that's a major issue moving forward. But it doesn't mean that we come crashing, and it doesn't mean we go to all-time highs. What this means is that we are technically getting prepared for the next rundown, for the next move, and we got to identify where something is going to change. So therefore, I am doing this right now before market opens. For me, it opens in about 4 minutes. But either way, I'm going to give you the level that's going to be the next demand, or it just sink or swim. Basically, is what's going to happen, right? Everything closed bearish this week. The whole month of April, super bearish. Okay, and we still have the Fed speaking this week, basically on the rates, interest rate hikes, and other than that, everything is still the same, right? Still, inflation is in the air, recession is in the air, and China lockdown and the war. So what do we look for now, right? So the main thing that I want to point out right here is this this last zone that we have, right? This is the previous base before we ran to that all-time high, where we stalled from this nice staircase pattern. Okay, so the one thing you want to look for on a staircase pattern is the bigger base. All the other little pullbacks are not demand levels, they're more support levels where they probably don't have enough strength to hold. Therefore, the break of a demand is going to give you more the strength of a downtrend or an uptrend, whichever one comes first. Either we bounce hard or we collapse hard. One of the two is going to happen. So from this point, from one zone, from this demand that we have in this, the last one here, the next piece is way down here, basically from the pre-COVID level. Now I'm going to go show you something that's going to be amazing too. That's going to probably catch your attention, right? One of the biggest things is financials. Financials basically gave up a nice demand here that's leading into this specific level from this all-time high previously that we dropped. Financials dropped here, and then they range traded. But look at where XLF is headed. Like, this is legit. Financials is legit going to probably retest this level before the COVID drop. We never really got a retest. All we did is got a run up here and then a breakthrough, and we never got that proper retest. So more than likely, financials are the ones that are getting hit the most, just because of the inflation and the interest rate hikes that are affecting all banks. So buyers are not coming in general, and they're doing less sales. Okay, so that does hurt financials, but you guys go do your own due diligence on that. But I am looking for this target for financials if this thing it continues, if it holds, which I hate to say this, but I really hope that the market holds. Okay. But again, I'm not basing my trades off of hope. I am just saying in general that I really do hope that this market just holds and does not drop like any further aggressively, right? But again, I can't control the markets. I can only follow the levels. So just giving you a perspective on where the financials are at and the potential that some of these tickers may have. In this case, if we do give up this level, this 41, okay, psychologically 41, this is going to drop all the way into this bottom level of 35.20, 35.20 and 32.60 area. So basically this base from where we had, again, that pre-COVID level before that massive drop, that's the level that we're going to come in and test again. Only if we give up these gains. And the only way that something like that will happen is if we get a proper breakdown, right, with a proper retest and a continuation. That's the only way that that's really going to happen. Otherwise, a lot of the volatility is going to come in this week and it's going to increase. So this level specifically has to hold in general for us to even create a green week. Or even just a green month and kind of go back up here into this 46. So that's your first scenario, okay? That's your bearish scenario. The next scenario is that I want to hold, and in order for this to hold, it could create a nice range like this. The good thing is that we open kind of flat, okay? Again, we still have all night, guys, so don't get too crazy that, you know, we gapped up a little bit or we're holding markets. We won't know until market opens. That's basically what we're waiting for, right? So if we can just find a nice space here, if the Feds can come in and say, hey, we're not going to increase the rates as fast as we thought, then I think that'll be some type of hope. Okay. So just my idea, if we do hold this demand and if the Feds come in and kind of save the market like everybody wants, they are going to say something like, we are not going to increase the rates at this moment. We're going to wait just a little bit further. So we're going to extend the time period. That's kind of like a conversation that may happen in order for this market to actually hold and continue to get some hope in the market. Okay, that's the only thing that I can potentially think of that can give the market hope in order for us to hold this specific level. Otherwise, below the 41, guys, it's going to be pretty hectic and it's going to create a lot of bearish talk. It's going to create a lot of bearish momentum, a lot of volume. That's what it's going to create. But either way, please, guys, anything above this 41, go on the 4 hour. I'm gonna go on the 4 hour for you guys. Simple. Anything above this candle right here, this candle body right here, and that wick. Okay, so that 41.20 and 41.40 is going to be your break above. Anything above this specific level, we're going long. Anything below it is going to be a short. Okay, from then on to the downside, guys, you got to be a little more wise as to what you're looking for. Look for 41. Look for 40.50, look for 4K, look for some whole numbers coming to the downside and the same vice versa to the upside. Look for whole numbers. So above that 41.50, look for 42, 42.50, 43, 43.50, and so on and so forth. That's how you keep every position trailing, because it's going to be a psychological thing here with the full market either holding or breaking down or breaking up, whichever one comes first, right? But you would think at this point that in general the whole market is kind of like oversold, so there's going to be a lot of people looking for divergences on your RSIs, on your MACDs, and so on and so forth. The stochastic's about to cross the I don't know, the Bollinger Bands at the bottom. I don't know, whatever's going on, but there's going to be a lot of some oversold stuff as well, oversold talk, that again, it may potentially hold this market green. Like I said, hopefully this week we stay green just because of the aggressive sell-offs, the aggressive earnings, and all the major names are basically all said and done. Okay, so that's ES, guys. I hope that gives you a little more insight as to what the market may hold, right? Again, I'm gonna give you a bearish scenario here for NQ. For NQ, these two levels, I'm gonna tell you that are all you really need in order for us to hold. Okay, so here's the level. 130, okay, psychologically the 130, and then down on the bottom the 126. From there, we're looking for 120.45, and then this bottom of 10.950. 10.950. Okay, these are the only levels that I really am concerned with. As long as we hold here, we create a base, we kind of go sideways. I don't care how sideways we go, as long as we hold here and we don't break any further than this specific blue line, which is your 126.46, 126.47. Just rounding off to some whole numbers, right? As long as we can hold, guys, and we can stay above this candle body, I'm looking for a nice uptrend on tech. Right. The only thing that I am very concerned about is the chip sector, which is AMD, NVIDIA, INTC, TSM. A lot of these tickers are still downtrending, and on the weekly time frame, they all look very bad. AMD has earnings this week alone, and I don't think it's that great for a lot of the chips because of the supply chain in China. They stopped producing just because they are on lockdown, so it's going to affect sales. There may be a high demand, but there is no supply for these. So that's the only concern that I personally have for the chip sector in general. So my overall sentiment for the chips is still bearish. And again, just kind of like I showed the XLF where everything went back down to its pre-COVID levels. I almost feel like AMD may hit this 59 and 48 level if we break below this 74 right here. So this weekly time frame, yeah, this 73 and 74 area. If we break that for earnings, this can potentially break down even further, which would be down here 48.60 and what is this 58. So it's not looking that great, guys. Okay. Be aware that the chip sector is getting affected because of supply chains, okay, not because of recession or anything like that. It's just the supply chain is really affecting this, right? So that's the major issue. I mean, on top of that, we have the recession and inflation and the interest rate hikes and all this stuff, so it's just an add-on, but mainly it's the supply chain that's coming towards this specific sector. Okay, so the next one is going to be RTY. Now this one has the tendencies to still range trade, and you guys know on a consistent basis that I always point this out, and it finally broke below. Okay, so just to give you guys an idea as to how it trades in this range for such a long time, it like goes in and it snaps back in and it snaps back out, but it always comes back inside a range. Unfortunately, this week we closed here at the bottom. It made a new low. Made a new low of the year, basically. So from when we hit this 24.60, we've just been trending down, and we're gonna healthcare and financials have been getting hit the most. So I'm a little more bearish and on RTY for that reason. And a lot of the healthcare have been trending down. So these already trended up. I think they're already done with the season of trending up. And the only reason I say that is because COVID is done. The pandemic is basically over. So there's not a huge necessity for healthcare stocks to keep on trending up, or even vaccine stocks. Okay, no matter what, I think a lot of it's over. Even though China is on lockdown, there's always going to be a need for medical. Okay, I'm not saying that there isn't a need for it. I just think that the hype for it is basically done. And for these to pull back just a bit, it would create a little more weakness in RTY. Okay, so that's why I'm kind of leaning a little more bearish on RTY than anything else. But again, I hope that's not the case. I hope that we hold, and I hope that we can potentially go green this week with some crazy buying momentum. People go crazy and just start buying. But I guess that's just me hoping and everybody else hoping, right? And there's just too many people that are so bearish that you almost just want to switch sides and just go 100% bullish, right? But that's not the case. The case here is if we break below, it's going to drop even further again into this pre-COVID level. Just like I showed you with financials, the same thing may happen to healthcare and just a lot of stocks that are done, basically done trending up and getting hit by recession and inflation and rate hikes and all this other stuff. So everything is just looking back, guys. Okay, again, I'm not here to tell you guys that the world is crashing, but the way that it seems, it kind of almost is. But don't quote me on that. But anyways, that's kind of the weakness in RTY. Okay. Another thing that I did notice was gold. Okay, I've talked about gold just a couple of times, plenty of times while everything was moving up and down. The one thing that I did notice is that this breakout is still kind of holding here, but there's not a lot of pressure in it. Okay, usually when the market goes red, there's more pressure in gold because it's a safer asset. What's happening in the markets is that there's a lot of adjusting, and the adjusting is not going towards a safe asset, meaning that somebody out there believes that the market is still healthy. Okay, healthy in a way that you can adjust your portfolio by investing in other sectors versus trying to get into a safe asset. The safe asset was gold back in the day, and now it acted like that when the war came in. Okay, just like I pointed out last time, this is the war catalyst, and it ran, and then once this rejected, the market went green. So these past 2 weeks, gold has been red, meaning that there is no buying pressure and that there's not a lot of fear in protecting assets. Okay, so there's more managing risk on the adjustment side versus hedging your position for a risk in the markets. Okay, hope that makes sense. So basically what I'm saying is that there's a lot of investors who are adjusting their portfolios based on the sectors in the markets and not putting their money in safe assets like gold. That's kind of what I'm saying. Okay. The next thing is going to be oil. You guys know that there's a lot of volatility still with oil. We're kind of still in this pattern right here. So if this thing breaks above this 107.50 or even just 108, I think it can run all the way to this 115. So keep that in mind. Any oil company that you look for, XOM, OXI, and I think Shell, I forgot the ticker, but Shell, they have potential to run up this week. Okay, so look out for that. Look for China to go out of lockdown, and once they go out of lockdown, there's going to be a strong demand for oil. So the demand will push it all the way up because there is going to be plenty of supply for the oil in general because of everything that's going on. So while they're on lockdown, it's not being used, so it's being stored. While that's being stored, there's going to be enough demand and enough supply to go out in order to lead into a bullish run for oil. So as long as we can hold here and go above 108, I think it'll continue to run. Otherwise, below 100, I would stay a bit bearish on oil in general. The VIX, there's still a lot of fear, guys. Like I said, the VIX cannot be charted. I don't know how many of you guys are still charting the VIX, but it can't. Fear cannot be charted. This moves based on fear and volatility in the markets. Doesn't move based on levels. So random alerts, just anything above that 34, 35, 36, 37, 38, whatever. I'm hoping, again, like I said, that we hold these levels in the market. The futures hold overnight. We get some little bullish runs. We get a bullish week, and watch this thing for it to die out. If this thing continues to go green, then anything over that 32 to 33.50 would be more fear. Okay, it's just an increase of fear. Okay, not saying that the break of that level is going to be bullish. It's just the increase of fear, because right now the fear is very high in the markets. All right, so hopefully that market breakdown makes sense for you guys. So what I'm going to do is give you guys now a few tickers that caught my attention for this week that just made sense to me that I would love to trade. Now there's going to be some earnings. Like I said, AMD, I'm a little bit bearish. Shop has earnings as well, and since Amazon got hits, I think Shop will be a little bit bearish, and it'll probably go down to the 300 levels, which is pretty cool, pretty nice for Shop. And I believe this thing is going to have a stock split as well. So it just makes sense that these tickers are coming down. Amazon, Google, and Shop, all three of them. It just makes sense that they go down because investors like sweet deals and they can load up on these tickers, right? Shop in general is a great company. Amazon and Google are amazing companies that if they have red days, it's almost like investor territory where they should start loading up on shares for the long term. Okay, but yeah, these have earnings. So does SQ. SQ is another great company. I believe that we've kind of found a bottom here, but again, my opinion doesn't matter. What's going to matter is the results of earnings, whether we hold up or break down. That's very simple. So not touching any of these, of course, for earnings. You guys, good luck if you guys do. I'm leaning bullish on SQ. leaning bearish on Chop and AMD. Those are my thoughts, and do what you want with it. But anything that has to do with earnings is a straight 100% gamble, right? So for my first ticker, it's a big name for those with big accounts. Very simple here. So this nice little base right here on Google. Break above that 23, what is this? 23.57, I'm gonna go long. Break below this 22.76, I'm gonna go short. Very simple. Target here, target is the wick, and then target is this candle body. Very simple setup right here, okay? Next one is gonna be Facebook. After everybody being bearish on Facebook, and after Facebook got beat down so much for the rundown into earnings, and after these earnings, it got beat down, everybody was bearish 100%. This thing surprised everybody and squeezed out every bear out there. So what do I see now is a rally base. This is either going to rally or drop. Whatever comes first, I don't care. I think the setup is perfect for a rally-based rally or rally-based drop. And these are the type of setups that I personally like to trade just because it's based on zone trading. So anything over 207 early entry, 210 psychologically, a lot of people are going to go long. And break below 198, sorry, 199. Yeah, 199 is going to be short. So long above, short below. Very simple setup here for Facebook as well. If market is going to go bearish on the retail sector, I think Walmart's going to a great opportunity for a short position. And again, it's a very, very simple setup right here. Okay, 153.50 to 153. Break above, break below. It's going to go long, it's going to go short. Whatever comes first, that's the entry that you take. Okay, as for targets, all you got to do is look at the previous candle body, 155.30, and then down here, 150.70. All right, you want to drop it? You want to keep dropping further? Then let's go. Let's trail it all the way, and make sure that you never go red on your position. Healthcare, just like I said earlier, I think this is going to be a great opportunity for a break below. If this rejects right here, this specific level, this 509 to 507, I think this has enough room to drop to this 500 and even 490 and 480. Okay, after this nice little downtrend, it's finally coming down here, and oddly enough, it almost looks like a head and shoulders, almost looks like a triple top up here, and it looks like another triple top right here, right? Sorry, no perfect lines, but it looks like instant rejection. Like I said earlier, I think there's going to be a adjusting for healthcare where they're going to pull back some. And if this market continues to break lower, I think healthcare is going to be one of the first to drop with more aggressiveness because they're way up there. So there's more room to the downside for these. But again, it can be the opposite. These can actually hold strength while the market actually holds and provides a lot of bullish plays. But in general, there's a lot of bearish sentiment still. So I'm getting prepared here for the bearish side. And I already had set my alerts on that break below. And then I'm just going to set a couple more here just so that I know that I can short something like this. Now, for this one, the spreads are a bit wide. So if you have a big account, have fun and enjoy. If you have a small account, just be careful on the spreads, because the minute you enter, you can automatically go red and it can mess with your emotions. The next one is going to be Disney. I like the setup that we have here. We have this nice little channel. So if this breaks even further, it's going to keep selling off. But I am looking for a slowdown on Disney. It's more of a side chart. It's more of a equity type thing where you can look for long-term shares, in my opinion. I think Disney is a great company that can provide a lot of great value and future growth. So if you ask me what I think I'm going to do for earnings, depending on where we're at, if we're below like 110 or 100 and we're heading into earnings, then I for sure will grab a lotto call in the money and I will risk it for the biscuit on this one. Okay. And that's just my opinion. I'm not telling you to follow me, but definitely look for some equity here long term, right? But that's Disney. We have a pattern setup right here, which is a bear flag, bull flag, channel, whatever you want to call it. But either way, on the break below this, 354, anything 354 or 350 is going to drive even further to the downside. So just be ready for the downside or be ready for the upside. If you want upside, I would go here. I would go here and ride it all the way to that top of that trend line for a bullish play. But either way, I think this is more of a bearish scenario. So I'm giving you guys a couple shorts. I'm giving you guys a couple bullish, but also preparing you for these good setups, right? All right, the next one is going to be ROKU. I think ROKU has had enough of a sell-off. ARK is in a great spot, but this almost reminds me like of that Facebook, right? Here's your rally base. So for ROKU, again, it's very easy. Right here over this 96, anything over 96 is a long, anything below this 92.60 is going to be a short. It's a very tight right here because of the candle bodies, and your targets are going to be the wicks. And then over here, your target is just going to be 85 to the downside. Okay, so that's ROKU. The next one is Snap. So I have Snap because I'm watching Facebook. Most of the time, these two like to run together sometimes, all right, not all the time. But this is a perfect setup of a trendline retest. So if this can stay over 29, I am long on Snap and Facebook. Okay, so Facebook and Snap, I'm watching both. Snap is more for a smaller account. Facebook is more for a bigger account. But either way, you can take both. If you trust the process, just go heavier on Facebook if you have a small account. And if you have a big account and you just want to go super heavy on something, then it'd be Snap, right? Otherwise, below this 27.80, then it's going to be a short. All right, the other one that I have is FDX. FDX is more of a random ticker. It's kind of just hanging out right here at this demand. It's made a new low and it broke below. When it broke below on Wednesday, it snapped back inside. Okay, so it's holding this 199 and 200. So if this can just stay over 200 psychologically, I think it's going to be a good long. But if this cannot trade above 200, it's going to be an instant short. Instant short because it can drop you based on the weekly time frame. There is no major support right here until this right here. It's 176. So that can be a nice drop for FDX. So matter of fact, yeah, see, so this is what I'm saying. There's no major support until, yeah, I was correct. All right, here's your supports. There's your support right there. So there's your 186 targets. So if this thing drops, there is a gap right here in between. So that's kind of like the bottom of it, targets. So 188 and about 184 area, that can be a nice drop for FDX. So keeping that in mind, guys, make sure that you set those alerts and you follow that. If that drops, it's going to drop. In the bearish market, this thing will have enough room and volatility to just freaking collapse. Okay. So yeah, those are a couple of ticker, guys. I did make a full breakdown on each sector for conservative collectors, and they have a full breakdown on everything. And we're just gonna, play along. Whatever comes first, guys, whether we continue dropping here or we hold, whatever comes first, that's the direction that we're all gonna hold on to and do the best that we can to capitalize on all this. All right. Whatever you do this week, please do not get a bias. Don't come in here and say that this market is going to come crashing and then you're in your bag holding a put position. Also, don't come in here thinking that everything is going to go 100% bullish while you're bag holding a bullish position. Okay, so whatever you do, manage your risk properly, guys. I know that sometimes it's hard to cut loss because you don't want to accept it, but because I speak on experience, it's very tough to do it, but you have to respect your stop losses and your take profit areas no matter what happens. Even if it keeps going, even if it keeps dropping, whatever direction you're on, please just respect those levels. All right, if you're in there and you're bag holding because you're biased, just get out. Don't think twice. Okay, that's how you will ruin your trading journey and your trading career. Okay, so every day we live to fight a new day. And we are fortunate enough to be able to have these tools and the knowledge to be able to trade these tickers on a day-to-day basis, and lots of opportunity, guys. All right, so whatever you do, don't feel like you're missing out on anything because this market is open all year long, so you're not really missing out. Okay, so if you got to stay disciplined and be patient, be patient. I mean, otherwise, enjoy those puts, enjoy those calls, whatever comes first, guys. All right. So yeah, I'll leave you guys with that. I think that's more than enough for you guys to take in. And if you guys want more of that market breakdown of each sector, hop into Conservative Collectors, where I broke down a full breakdown on everything that I potentially could, and give you more information on how the market's going to be this week. All right, so I'll leave you guys with that. Stay green, and I'll see you on the next one.